What's going on, YouTube? Time for another fun recap here. I was a little late to today here, coming in, got some market open, had my other business, worked very late sometimes at my other company. So was late to the market. Now let's go over the single day trade outlook here. Here's my drawing tool. Bam. The day trades that took us here. Now, for the last couple of days, we've been seeing pre-market dump off into rip roar rally after data, whether it be good, bad, ugly. Now, if you watched our other video, or not, I'll throw it in the description below, but we have a 10 SMA loop forming. Now this is SPY, and when something breaks under the 10 SMA, which is our blue dash guy right here, we suffer 1 to 3 days underneath that before we get a nice bounce back to the 10 SMA, or in my instance, I'm looking at Qs a lot here. I have a couple of ES contracts, but I have more NQ contracts here. Let's take a look at that on Qs. This is the main play here. Again, 1 to 3 days, but why are Qs more important? Well, we have my favorite play in the world on the daily chart, a gap down. So when we are at a very beautiful roll, right? And I'm talking roll up here where we are just off sentiment gapping and going and just flooring it back up here, right? The heck? We have an opportunity to catch these bottoming trades. Now, these bottoming trades have a system. Once it breaks under, and this one has a gap down here, like that, has a gap down here, you have 1, 2, and 3 days underneath this 10 SMA. Now 2 to 3 are the days you want to watch for the reversal plays, and usually those are where the support comes. So we've been long in those last couple days here as a pretty nice play. Now a lot of the time on the daily chart here, I look for dojis or pin bodies, and this is a pin body with the price actions body between its open and close is very close to each other. So if we go into today's trade day on Qs, we're going to notice that that body is going to be a significant over under. We have half candle retrace and close right there on that channel. So let's talk about our day trades that made us 1,200 bones here. So we have that swing outlook for the 1 to 3 day under. We've been buying all the pre-market datas no matter what and just having this run up early, and it's been repeating itself over and over, which is great. But here's the 2 biggest pieces of information today that we took our day trades on, making that 1203. Now, this green trade came from back test of confirmation. So let's look at price action here. Pre-market high is something that we have coded in right here, no matter what. And then the secondary trade was a 666 back test. I took a little short back to the 666 and then a tiny bit long for the breakout. Now, with these 2 things said, confirmation is the key. I woke up a little late. Like I said, I was coming into the open like right here. I only had a couple minutes to prepare, getting on the charts. But what I seen was a confirmation of the pre-market high breakout to Momo continuation, right? And what that Momo continuation needs is just a confirmational back test of support. So if a level is at pre-market high, we break over that level, we back test this candle right here, that level as support confirmation, and that will push back up. Now we needed data to push this candle all the way through. That's the big data candle. So that squeeze was catalyst driven by that, but then we had another secondary trade. So again, we came into some high volume profiles, some resistance, and most importantly, VIX, we'll go over here in a minute, had the secondary breakout. So my first trade, I wanted to see anything above pre-market high confirmation, which is this level right here. So you broke over, you back tested anything above, and I wanted the 666 on the 5-minute, and that's our dashed light purplish blue line right there. So we had a 666 break over. So I'm like, wow, this thing is extremely strong. We're going to have another force up here until the VIX comes back down and comes back down for its gaps, and we'll go over that in a sec. So the secondary trade was, wow, we broke through the 666. We need a back test again. We're moving too fast, right? So if we look at our intraday indicators, I had to go to the 1 minute for this one. And I'm looking at our oscillation indicators, our MAC and our RSI. I'm like, wow, she's getting pretty hot here. And that's this this massive push up, right? So our back test here, pre-market high, and then our big fling up. This one is the 666 back test for the next long. So how would you have shorted that? Well, you can see the MAC and everything else kind of coming around from a fresh high. This one wasn't too bad because we had an overheat lower high in RSI. We had a cross to the MAC to the downside, not a lower high in the MAC moving averages, but we did have a cross, and we needed to get back down to the 50 RSI. And that's what I usually like to do for the secondary trade. So first trade was break over pre-market long, hold, go to the 666. The 666, remember, is like right here. And then on the 1 minute chart, it showed holding the 50, right here, RSI. And then we had a histogram, and this is a lagging indicator, max, a little slower, start to come back up. So we pushed. I'm like, okay, higher, low RSI, higher, low, and divergence kept going. Now we got further divergence here saying, okay, look for the further short. So let's go to the VIX. Okay, so those two longs on confirmational 666. Boom. And these are how we figure these out. These little tiny white boxes, they're little price levels indicating that the VIX has gaps that are still open. Okay. And VIX tends to come down to the pre-market or pre-market, whatever it is, live hours. They come back to the gaps on the 5 minute. And I like to watch the 5-day 5-minute a lot. And the standard deviation usage here is also high. Again, we've been doing that since like 2018 here. I just love the standard deviation on the 5-day. So this guy, -1, okay, +1. Generally speaking, we don't stay outside of those ranges too long. Great example about 3 days ago here. Outside the +1, comes all the way back down to center, almost to the +1, all the way back down under the center. And then we had a couple consolidations, ran, okay, but then left gaps. And this is the most important thing. We had a gap down runner here at the open and VIX because it closes at 8:15 Central and opens up at market open. So it closes for 15 minutes, right, before we get to cooking. So it left a gap here. This has to fill today. So what I'm thinking is we have a rush back down to unfilled gaps, right? So the VIX has to magnet to gaps because that's what the algorithms love to do. They come to bring it back down to gaps. We have one right here that's wide open, 1354. So 1354 was one that I knew that needed to be filled. Well, we open gap down, so the common sense play would be like, okay, if this holds under the gap, starts going, we're going to magnet to this gap, and then we're going to lower to the next one. Now, 1337 and 8 was a gap that was already closed here prior, but it does have another gap associated with it right here that is not filled just under in the 1320s from a close to next day open. There's also another main one back here that we'll be looking to fill as this long persists, right? So VIX, whether it gives us another big pullback through the afternoon, fills this gap, and then goes back down to test some of the ones we just talked about. Great, but the sentiment is for those day trades, the VIX had to come back down and magnet these gap fills and back testing big support. The last big driver indicator here, we'll show you right where the market crosses, the 5-day 5-minute MAC. This is my favorite indicator for setting up these trades right now. This has been hot for months. Look at our 9:30 Central Time cross. That tells you to look, use your eyeballs coming up, at the consolidation, because we have a consolidation here on the VIX that is going to have a potential move back up, and that MAC is giving us a signal going, hey, pay attention to me, I'm getting across, I have a potential reversal, so the market has a potential short, right? So let's take a peek at that. So right here at that breakout level, right around 9:30 to 10, and 10:30 is when the algos close in Europe, so we get the swap, right? So the EU swap is always at 10:30 Central for me, and that is a big convictional move. So if the first part of the day is straight up like that, just move, you only play long on the force ups playing VIX gaps. And then when 10:30 hits, if the VIX is giving you that signal, you drop back on. And what happened right at the 9:30-10 mark? Let's see. Here's 10:30 mark. 10:30 mark. We had it coming. So let's look at our 5-minute chart because we're going to match our MAC at the 9:30 Central cross. 10:30 zero close. Let's see what it gave us. So way back here between 9:30's VIX cross into 10. So these 2 points of interest, which happen to be high day, the VIX was signaling the 5-minute MAC was already crossed, saying, hey, I'm coming. There's a potential short. Don't go long. And that's what happened. What do we need here? So in my brain, I'm looking, what do we need for the back test? What hasn't happened yet? We got the back test to the pre-market high, right? That's number 1 confirmation. We got the back test of the push and scalp here on the 666. That's number 2 confirmation. What haven't we hit yet? VWAP, right? So we have not had a VWAP tag yet today. So that is the third big indicator going into price action momentum. How do you set up the next trade? Well, VIX is coming into huge support. We have the MAC cross 9:30, an hour before this short happened. It's going, hey, start looking for the top. Look at this top. Where's this? Yesterday's highs, right at the orange dash line. So another premium resistance point right here, matched up with VIX, matched up with a breakdown on our side, matched up with a roll now at 10. So 9:30 VIX told you to watch. 10 o'clock SPY told you, hey, I'm tired. So within that 30-minute range, you should have had a very good outlook going, I'm going to short this top. We're going to stop out above yesterday's highs. And where are we going? Our target is VWAP because we still have not had a live tag of the VWAP. So this short will come back down to the purple VWAP, bounce, and then next direction is the next confirmation. So hope these lessons make sense. Ask some questions if you got them. I can do video replies or any else. If not, follow me on Wall Street Trades at Twitter as we post a lot of these free trades in the morning for theses and our zones on volume protocol, and check that out. So tune in for the next, and I hope that helps.